Hey traders, Jason, Jenkins Risk Management. Hey, listen, a couple of you are asking about different time frames. Jason, what should I look at? The 30-minute candle you were referencing? Is that for a day trade? You say core position. What charts are best to look at to help me decide? Because there is a difference between having a multi-durational model where guys, the model that we built is fractal in nature. What that means, if you guys want to look at what fractals are, just put it in Wikipedia, Google. You can learn about it on the internet. But fractals are just what they sound like. So when you look in nature, you can look at the pattern on a leaf, the vein structure. That same pattern structure is the same structure of the overall branch as the overall tree. A fern leaf is a great example of that. So there's fractals in math and in nature. It's all around us, but it's basically that smaller patterns build into the larger patterns, and these patterns are self-referring a lot of times. Even your DNA code structure is self-referring. So we kind of built our model around that same thinking. So we're looking at patterns both on the 1 minute, the 5 minute, the 15 minute, and it's these same patterns that repeat, and it doesn't really matter the time frame. So we're using the same model. We're trading the same way we will on the 15-minute chart as we do on the 4-hour chart as we do on the weekly chart. Okay, and what you're trying to do is get a feel for the different trends within a larger trend. So I kind of think of it like, think about water going through a canyon, right? You have water, you might have a river that's running from the left-hand side of the canyon all the way to the right-hand side of the canyon. And there's a dominant flow, there's an ebb and flow down that canyon, right? If any of you everybody kind of gets that, right? So as this is the overall trend, but within the river, you're going to have water bouncing around between the rocks, right? Sometimes it's going backwards. So within these trends, you have intermediate term trends, you have day trade trends, and you might have 3 or 4 trend changes intraday within the context of an overall intermediate term downtrend, but within the context of a long-term uptrend. So it sounds kind of confusing, but it's pretty simple, guys. The point is that we want to identify a long-term trend and then identify where you are in the intermediate term trend, and then you can even do the same thing. I mean, we do this when we trade Forex. We're looking at the day trade trend. So as an example here on Bitcoin Cash, we've obviously just started trading this token, so there's not a lot of data here to confirm a long-term trend. All right, but a couple things you can do. So, and then I'll show you the intermediate term trend versus like the near-term trend. But when we look at, you look at the first day of trading, and I've talked about this in other videos, but these wicks, the wicks here, this is the intraday price action. It's very hard to tell where this thing traded first day. It's tough to say that these were real trades that went off. Most people didn't even have Bitcoin Cash in their brokerage or in their wallets to trade until very late in the day. So just to keep it simple, just bracket the high and low of this first day of trading and identify that zone. So as we pull back into the bottom of this zone, this was a great area to buy. Okay, this whole area down here. My traders know if you want to trade a little bit faster, if you take out that high of the first trading day, you can go long. All right, I don't know how much, I don't know where you could have sold up here, but that was a good little move. But the point being, there's just not a lot of data here, so we're going to play this with the idea that the market wants to go this direction. Let me move this over. All right. So our thinking is this way. And you'll see in a second here, there was an intermediate term downtrend that broke basically right in here, and we moved back to an uptrend. So this is an example of you have a longer term trend going one way, and then you get these ebb and flows of an intermediate term trend against that. You get an uptrend, downtrend, downtrend, uptrend. This is why you gotta, this is the fractal nature of trading. You have to identify what time frame you're trading. Alright, so here's another concept we call the swing line concept. This thing's all over the place. Okay. Here, we call these our wave formation bands. See, what direction is all this going? All these bands. Downward sloping, right? So that's showing you the flow. This is the hourly chart. So when we day trade, we look at 1 minute, 5 minute, 15 minute, and 30-minute chart. When we want to trade the swing time frame, we look at the 30-minute chart, hourly chart, 4-hour chart, and the daily. Okay, so day trades are anything within inside 1 day, not overnight. Swing time frame is several hours to several days, right? No, sorry, I misspoke. Day trade, several minutes to several hours, but nothing outside of holding a position overnight. That is the opposite of what a day trade is, right? You're just trading for the day. Swing time frame, several days to several weeks. Okay? And then long term, or what we call core trading, can be several weeks to several months you keep a position. And so for the near term, we're looking again 1 minute, 5 minute, 15 minute, 30-minute chart. Intermediate term, we're looking, or the swing time frame, we're looking at the hourly chart, the 4-hour chart, the daily chart. And then when we're thinking long term, we're looking at daily, weekly, monthly chart. And sometimes different trading platform, maybe Bloomberg, you go out quarterly or yearly. So here's an hourly chart showing you the intermediate term flow. Now this started to change here, and this is why I like these bands, because it gives a good visual. You can see how everything's moving up now. So Bitcoin Cash starting to move up, and you can see that in the wave formation. And it's actually a little bit easier to see when you go to the 4-hour. Man, these pop-ups are... Alright, so this is a simple concept actually here. This is a swing line setup. So inside each one of these 4-hour bars there's a daily trend. It's near-term trends. There could be 1-minute trends that are flipping around. But once you took out these lows here, all right, just notice each one of these candles is closed lower than the prior candle's high. And if all you do is follow the prior candle's high, this creates what I call a swing line. So right here, this candle almost got above that prior 4-hour candle high, but you couldn't do it. So that you didn't get a change until basically right here. So what is that showing you? It's showing you the trend of lower highs on a smaller time frame until right here when you finally broke to new highs. And then that started the new move back up. On a very simple level, you can look at the direction of the 8 here, descending, and then it starts to turn back up. That's showing you the same thing on a fractal level on the smaller time frame. So here's this swing line. Okay, same swing line. You don't take out the prior candle's high till boom, right there. Right, and that kind of started this move back up the last 2 days. Now we should have timed it better and been paying more attention there. Right, we're not going to miss those ads next time. So this is a 4-hour chart, and I'm showing you two different trends here. This was the first uptrend right out of the gates when this thing started trading here, and then you get the downtrend, and now we move back to an intermediate term uptrend. And when we go back to the hourly, it's a little bit easier to see. Okay. So just by following that 4-hour swing line, it's just a way of looking at this downtrend that basically ended right there with new higher highs. Lower highs, lower highs, lower highs. And then boom, right there he changed. These are lower lows. That's what defines a trend. Higher lows and lower highs. Right here you failed to make a lower high. We call that a phase 2 lower low. This is where you started to turn back up. So some of you that don't understand, I'm just teaching when you look back at the chart. I can only teach on what I could show you on the chart. There's nothing to teach over here. It hasn't happened yet. But I'm telling you what to identify now that the trend's changed. So from here, we want to be buyers on dips. All right. So this was the first sign that the market stopped going down right here. You failed to make a lower low. At this point in time, you're still making lower lows. Lower low. This low is lower than that low. This low is lower than that low. Here, oh, what do you have? First sign that maybe the market's going to turn direction. You failed to make a lower low. But you don't know if that's going to hold, bounce, or take another leg down. That's the first sign that maybe the market's turning. Now the key pivot is the lower highs. So this was a lower high. This is a lower high. Oh, I can't draw there. This is a lower high. So getting above this line changed everything. And then you see the uptrend started once you got above here. This is a higher high relative to here. These are higher lows now, higher low, higher high. So this is the formation of uptrends, higher highs and higher lows. So this is why we're buying today on this dip. Now that just covers the trend, guys, and we still want to be a buyer even if we trade back down to these levels down here. It's just how we work the position. I'm just showing you guys the different time frames. So this is an hourly chart, so this does a good job of showing you the intermediate term over several days, right? So we'll keep an eye on this trend, and then I'll just share with you the cycle real quick. You can see he's done a pretty good job down here. Alright, so this is the ebb and flow of time. This is like a pendulum or a metronome. Alright, cycle's low. Right, cycle's low, cycle's low. So this is still coming back down. This is just the hourly chart. If we go to the 4-hour, we like to use them in conjunction. So there's a lot of room for this 4-hour chart to come back down, this 4-hour cycle. And it was very low back here. This is where we should have been picking up more size. Okay, so I'm just teaching you guys a quick, simple swing line concept. This is how you look at trend on what we call multi-durations. Intermediate term might have a downtrend, but you have a long-term bull market. Well, now you have an intermediate term uptrend in what maybe will be a long-term bull market. We don't know yet. It's not really enough data here. But anyway, guys, we'll continue to work this position. Again, the big levels down here to watch were these lows from last week. Yeah. Yeah, guys, hope that helps. Let me know if you have more questions on the different time frames.